Hello folks, welcome back to a new episode, RALLYTOP Investing 3.0 SMC Masterclass here. In today's edition of our lesson, I want to teach you how you can make use of a single 1H candle to get high probability trade setups in the market. You may have been watching or seen other videos that talk about the 1H candle strategy, but trust me, this is very, very different. So if you are interested in knowing how to trade this kind of strategy, then you need to stick with me to the end of this video. This strategy happens often in the market. In fact, it happens almost every single day in the market. Now, if it doesn't happen in one pair, you will find it in another pair. I can assure you that every single day you will always be having setups in the market. Now, how do we make use of this? Now, I want you to first of all understand that we have 7 nuggets that you need to strictly follow if you want to actually use this strategy to make money for yourself. 7. Now, number 1 nugget is this. You need to pay attention to our time frame alignment. You are going to be using the 1H and the 5M. 1H as your higher time frame and the 5M as your entry time frame. Number 2, in an uptrend such as what you are seeing now on your screen, you want to wait for the sweep of the previous candle low. Very, very important. A sweep of the previous candle low in the case of a bullish structure. Now, in the case of a bearish condition, it will be the opposite. You want to see a sweep of the previous candle high. Number 3, and this is very, very important. Take note of this number 3. The sweeping candle must be the 2 a.m. Eastern Time candle. If it happens at any other time, do not take the trade, because it's most likely that you are going to lose money. It has to happen 2 a.m. Eastern Time. So you need to set your trading view to Eastern Time, to New York time. All right? Number 4, once that sweep happens, mark out that sweep with horizontal lines such as this. That's the sweep. Now, number 5, once you have marked it out, switch to the 5M time frame and wait for market structure shift, MSS. Now, if you don't understand what I mean by market structure shift, let me quickly show you what I mean. So let's assume this candle is here. Then you have the next one. So what I mean by market structure shift is this one. Price has to close below the low of this previous candle, as you can see here. So once you find that market structure shift, this is the candle you will need to mark. So that's the candle you need to mark out. So once you mark out that candle, now you need to take your trade from there. This is how you are going to take the trade. You are going to wait for price to come back into that zone, and boom, you take your trade lower. Okay? Then number 6 nugget, I said take the trade here. Just take the trade, don't waste time. And number 7, TP at 1 to 3 minimum. This strategy uses a TP of 1 to 3 minimum, except in rare occasions, and I'm going to show you that, where you will go only for 1 to 2. Okay? But minimum 1 to 3. So these are the 7 nuggets you need to pay attention to if you are going to be using this strategy to trade. So I'm going to take you to the live chat now and show you some few examples, like 3-4 examples, so that you know I'm not cherry picking. It's something that you will find it every single day in the market. And once you master this strategy, you will thank me for it. Okay, so let me take you to the live chat now. Okay, this is USD card 1H time frame. Remember, the first nugget is the time frame alignment. So 1H time frame for your higher time frame and the 5M time frame for your entry time frame. Now, number 2 nugget is that wait for price to sweep the low of the previous candle in the case of a bullish structure. In the case of a bearish structure, you need to wait for price to to sweep the high of the previous candle. And as you can see, that happened here. All of this did not sweep the low, did not sweep the low, did not sweep the low, but here it swept the low. And now number 3 nugget is that mark out the sweep with an horizontal line. Okay, that's the horizontal line right there. And number 4, that sweeping candle must happen 2 a.m. Eastern time. Please take note of that. 2 a.m. Eastern time, very important. And this is the 2 a.m. candle. You can check it on your charts. Okay, now once you have done that on your higher time frame, all you need to do is to go down to the 5M. Now, one more thing before we go to the 5M, and this is very crucial, very, very important. If you miss this, you will miss the trade. Now, remember, this is 1H candle. You don't need to wait for this 1H candle to close, because if you wait, you are going to miss a lot of trades. All right. Now, what you need to do is that once you find that this candle has swept the low of this previous candle and has retraced back into the range of this previous candle, switch over to the 5M. Like we want to do now, just switch over to the 5M. Don't wait for that candle to close. So this is the 5M. Okay. Now, if you switch the way I said it, this is what you will get. You wait for this structure shift, market structure shift, like I told you. This is the market structure shift. This is where it swept liquidity on the 1H, and this is the market structure shift. So, and I said, you are going to mark out this market structure shift, this candle. That's your zone in the market. If you marked it out, look at what would have happened. Price returned to it. Okay? Price returned to it. Before the 1H candle will close, price returned to it. Okay? So I want you to understand that very well. So you would have taken your trade to go long from here. That's your trade. TP. Remember, your TP must be 1 to 3. There, just target 1 to 3. It's as simple. Let's see 1 to 3. This is 1 to 3. So let's continue to play price. We have been tapped into the market. If you switch immediately, like I said, then you will be in the trade. So let's continue to advance price and see what happens. Can you see that? Boom. Can you see that? 1 to 3. Simple. That's the first example. Now, once you have gotten that, go back to the 1H and then look for another opportunity to enter the market. Here is another example. Take a look at this. This candle's low was not taken out. This candle's low was taken out. Okay? Once you find this candle's low taken out, like I said, mark out that sweep. Okay? Now remember, this sweeping candle, this candle that has swept the low of this previous candle, has to happen at 2 a.m. Eastern or 7 a.m. Eastern. 2 a.m. Eastern is for the London key zone. The London key zone that I use is between 2 a.m. to 5 a.m. and the New York key zone is between 7 a.m. to 10 a.m. Now, this has to happen either in the London key zone, which is 2 a.m. Anything more than 2 a.m., do not take the trade. Okay? If it does not happen in the London key zone, then it will happen in the New York key zone, and it has to be 7 a.m. Eastern. Please take note of what I'm telling you. So this is 2 a.m. Eastern. Sorry, this is 7 a.m. 7 a.m. Eastern. This New York, 7 a.m. Eastern. All right, not London. This is New York. Okay, so it swept that liquidity, and we have marked out the horizontal line. So we want to go to the 5M now. So this is where price swept liquidity on the 1H. Now you want to wait for market structure shift. And where is the shift here? Now here is the shift. Remember, I told you, do not wait for the 1H candle to close. Now, in order for you to take this trade, you want to take it from this, bullish candle opens below and closes here. Okay? So, if you like, you can take it from the closing of this candle, or you take it from the high of the candle, and this will become your zone. This is your zone. Make sure you give a buffer to this low. That's your zone. You can actually make it like this, the low of this candle. But to be on the safe side, make it to this low. Alright? And now, as you can see, price has returned into that zone. If you switch immediately when there was the sweep, as the sweep was happening and price was retracing back into the previous candle's range, if you switch immediately to the 5M, look at, you would have gotten this. Okay? And then you can go long from here. You can go long from here. TP, remember, 1 to 3 minimum. Your stop loss just below this low. Now, if it's too large for you, then you can use this low, this candle's low, as your stop loss. You can use that candle's low as your stop loss. In other words, this will become your low here. Okay? This will become your low. So, your TP 1 to 3. Okay? This will become your low. So your TP 1 to 3. And as you can see, this is 3 hour, but it's even above 3 hour. So let's do it 3 hour precisely. So that's around 3 hours. So let's see whether price will go our direction. Let's just say advance price. Boom. No, not yet. Can you see that? Boom. Hit our TP. Simple, straightforward trade. Can you see that? Let me show you another example so you know we are not cherry picking. So price was coming down and it took out the high of the previous candle. Remember, I told you that in a bearish scenario, you want the high of the previous candle to be swept, and here it has swept it. Okay? Now, this candle, this one, actually happened, I think it is London. This is 2 a.m. candle. No. This is New York. This is 7 a.m. Okay? This 7 a.m. candle. And it swept it. Once it sweeps, go to the 5M. So this is the 5M. I told you, don't wait for that candle to close. If you wait for it to close, you will miss a lot of trades. Now, it swept. Wait for market structure shift. Look at it here. Where is your market structure shift here? Think about it. This becomes your market structure shift, this one, because this candle closed below. Okay? So if you are marked this candle, take your trade from there to go short. Okay? And as you can see, candle came back into that zone. After this candle, it came back into the zone. So that would have been your trade to go short. Let's see how that would have played out. Your stop loss just above this, give a buffer, and now your TP. Remember your TP in this case. Remember, this is a retracement. So this is where I said, in this case, you need to go for 1 to 2 because this is retracement. All right? So you don't need to, this is 2. Let's see whether, That is correct. I said you need to go for 1 to 2. Because this is retracement. You have to be careful. Okay, that's roughly 1 to 2. And as you can see, price has already hit our TP. If you took it the way I said it, okay, price hit our TP before going back higher. All right, I said don't wait for the 1 hour candle to close. Immediately you see that sweep. As that sweep is happening, go down to your 5M time frame and wait for market structure shift and then take the trade from there. We are aggressive with this strategy. This strategy needs aggressive traders. Okay, so you are going to record losses. We are not saying it's going to be 100%, but I'm telling you that 60 to 70% of the time it will go in your favor. Okay, but before we continue, if you are new to our channel, please give us your subscription and turn on the notification so that anytime we upload a new video, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately. I'm going to leave all the links in the description. And if you want to learn more how to become a professional trader and become profitable in the market, you can join our VIP community. I'm going to also leave that link in the description. All right, guys, this is where we are going to draw the curtain for today's episode. If you want any specific topic to be covered, please leave it in the comment section. And don't forget to give us a like. All right, guys, thanks for watching. I see you in our next edition.